Bear Valley Community Services District. We're making this video because we had a board of directors meeting last week on May 19th, at which time we had a presentation regarding special taxes. And unfortunately, we had some technical difficulties that broke up the meeting, and we had some difficulties with maybe the audio. So we thought we'd try to replicate that presentation for folks and put it onto our Engagement HQ site so that people can have the information that we had hoped would have been on that video. Unfortunately, you won't get some of the questions and some of the interactions, but I'll try my best to, again, replicate the presentation and give you the information and kind of the background as we move forward in the conversation with the community about our special police and special gate taxes. So for starters, I want to go through the initial PowerPoint presentation that I made at a board meeting that kind of framed up what I believe are the needs to address this issue, and then the presentation that we made at the meeting last week. So I'm going to be doing some screen sharing, and we'll start with the special tax session, and this includes the prior presentation. So this process of talking about finances and structural deficiencies in our funds began about 4 years ago. We began taking some actions almost 4 years ago on the enterprise funds, the utilities. The rates for those enterprise funds and for those services hadn't been raised. In the case of the water system for 11 years, the sewer system 12 years, and solid waste 14 years. And so, as most everyone knows, because they have been affected, we were able to do the studies, have the outreach and conversation with the community, have the rates adjusted and implemented. And so those funds are now financially stable. And that really was the goal for those. As an example, the water rate, although it was a large increase, was really to cover all of the operating costs, the capital needs. It's not the rate that is going to fix all of the water pipes under our roads. In addition to those, we have 3 other special revenue funds and special revenues. The first is the roads assessment, which is $340 a year. That's been unchanged since it was established in 1996. Similarly, the police special tax, which is $80 a parcel, was set back in 1996, and again, 26 years ago. The special tax for the gate operations was set in 2006, 16 years ago, at $75. And all of those have been unchanged. There's no indexing in those tax numbers. And so in my presentation, I believed it was important for us to revisit those as well. The one thing that you'll see is we're not talking about the roads assessment. And the reason for that is we're going through the process of assessing and developing a plan for the rehabilitation of the water system underneath the roads. We all know the roads need work, but it would seem illogical to put resources, dollars and cents into improving a road only to have to dig it up because the water pipe underneath it needed to be replaced. So the process we envision is we'll get that plan for the water system, figure out what the priorities are for segments to be replaced in what order, and then have the roads on top of them fixed afterwards. So we're not talking about the roads assessment, it's just the police and the gate taxes. So for the police tax, back in 1996, when it was established, it generated approximately 62% of the operating budget for the police. 26 years later, it's 15%. And since it was established, the budget has gone up about 6.3% per year. So this is the graph that kind of shows the costs over time. Those are the orange bars. And then you can see the special tax income is the blue line, which is static. And you can see the differences over time. The gate tax was set in 2006 at $75. Initially, it generated 92% of the costs to run that operation, and today it's about 40%. And similarly, the budgets have increased on average about 7.6% over 16 years. So this is the graphic that shows the costs of operation, and then the blue is the revenue line, and so you can see the difference over the years. So the general fund is the discretionary fund for the district that funds the police and it funds the gate and is made up mostly from property taxes. So another comparison is that since the gate tax was established, the property tax revenues have averaged an increase of about 3.8%, while the budget is at 7.6% greater in terms of the increases. For the police, that property tax time frame is 26 years, and it's averaged an increase of 4.4. The annual budgets have increased about 6.3 on average. So you can see there's being a difference between the revenues coming in. We know the tax is static, but even the general fund revenues aren't keeping pace. So we concluded that with flat revenues from the special taxes, the increase in costs outpacing the average tax revenue increases, that we would be facing a financial challenge. Consistent with what the board has been doing for the last few years, I brought forth the item for discussion with the board, and that's what brought us to the meeting on the 19th. I explained to them that we had created a model, financial model, for revenues and expenses for the general fund. And in particular, we took a look at what our revenues and expenses would be for the next 20 years. Along with that, we've developed a capital improvement plan for 20 years. And so in this model, we added 20-year projections for both the police and the gate operations. And we use 20 years because that horizon, particularly for capital improvements, where you buy a piece of equipment and it can last 5 years, or it could last 8 years, or it could last 12 years or longer, but you plan for its replacement, and you can identify when the funds are going to be needed, and you can make plans accordingly. So we're planning out 20 years. I think that gives us the ability to catch cycles in certain kinds of equipment or facility needs. And so I think that's a solid approach. So what we've created is a 20-year model. We did it consistent with the modeling that we used for the water, sewer, and solid waste rates, meaning same kind of formatting, so it may look familiar to people. But more importantly, the indices for inflationary effects were the same that we used for the 5-year models for the rate studies. Part of the modeling that we did really has kind of the same goals that all of the utility studies had, which is first and foremost, we want to ensure that the revenues coming in are adequate enough to just cover the daily basic operations, the staffing, the needs, the cost of electricity or natural gas, etc. The second area is capital expenses, and we'll get into that a little bit more, but that we are generating the revenue necessary to make the regular kinds of repairs and replacements to the systems. The water system, as an example, has 38 booster stations and tanks, and so we have motors and electrical systems and a lot of things that require some repair and replacement. So we want to make sure we have money to cover the regular kinds of capital. And then lastly, we want to make sure that we're adhering to the minimum fund balance policy that is set by the board. Excuse me. So in each of the funds, there's a minimum percentage, 20% or 25%, or in the case of the general fund, because of the increments of property tax, 50%. So what that means is each fund has a balance at the end of the year, and it should be at minimum what that policy says. So this is, again, similar to what we did for the rate adjustments, and we're looking at it for this one as well. Pardon me. Okay, so the projections have the current expenses exceeding our revenues. We have projected that within about 7 to 8 years, roughly, that excess reserve fund that we do have would be exhausted. And so we have time to make some adjustments, and that's part of the reason to use 20-year modeling. And this is kind of a picture of it. So this is the snapshot of the general fund model piece, showing revenues, starting with the fund balance. I don't know if you can see my cursor, but we have starting fund balances. We have our property tax revenues. Those we've indexed at about 2%. You'll see the green, which is the special taxes, are stable, static for the 20-year period. And we go through all of those revenues, and then we use the expenditures, and we do include capital because I do think it's appropriate to plan for that. And at the end, you'll see down here we have an ending balance, and then we have a line that is the over or under the reserve requirement. And that's the one in 6 or 7 years. That's kind of the first area of red or concern, where if we don't make some adjustments, we'll begin to violate that policy and go below that minimum reserve. And then it continues for another 4 years. And that's where at 4 years, we essentially have depleted the general fund because no adjustments are in this model. So give you a little bit bigger picture of the model. And we've included the general funds, and then we've included the summaries of the capital improvement plan. We call it the CIP. And that lists all of these assets out into the future that we expect to be needing. It's not perfect. It can be improved. It could be refined. But we presented it to the board last year as our first attempt to project out that far, 20 years, and give our staff credit for undertaking that, because I think it was a little bit out of the box for them to be thinking out 10 or 15 or longer years with all of the equipment and or facilities that we've got to take care of. So this includes the capital. This next page shows you how we've incorporated then the modeling for 20 years for the police department, revenues from taxes and expenses, same with the gate, and then we summarize it. And I'll hopefully successfully walk you through how we constructed all of this and how it fits together. But that's what the model looks like in its whole. So for starters, we use that same template, same approach that we've used for our other rate adjustments. And this is just a big picture of what the future expense projections look like for the gate. Zooming in a little bit more so maybe we can see it. This shows you kind of what our expenses are historically, and then we project them out 20 years. But this shows you that we actually go by various line items in the budget to project them. As an example, we index or account for inflation with these escalation factors. As an example, we show some general inflation down in the 2% area, which is not adequate today, but that was the projections, and we're staying with it. We want to be consistent in how we present all of this information to the community. And then we look at wages and benefits and other kinds of factors. I will point out, while we may have a 3% indexing for the employee wages, these other percentages down here, like benefits or CalPERS or Social Security or unemployment or workers' comp, those are static percentages. So it's not like we increase. That's the percent of the wages that happen every year. So as the wages go up by 3%, the benefits are 7% of that increase. So I hope that's helpful. So once we've done that, in our other rate studies, we would take all of that data and summarize it into what we had called proformas. And the purpose of this was to really help us focus on, what are the rates that were needed to cover all of those goals of the operating, the capital, and the reserve fund. It's a little bit different kind of model here, but we'll show you what the end result is. And in this case, the rate for the gate, in order to ultimately minimize the impact on the general fund, would be from 75 to 185. I think this comes up here. And it would need a 3% inflation per year. And what that achieves, going from here to 185, and then you'll see we certainly have a large increase, but we index it, here you go, 3% every year for 20 years. So that model minimizes the impact on the general fund. So kind of call it the fully funded model. And here's what that does. Under the general fund contribution in this model, then you'll see that rather than the 394,000 in the 2022 budget, we now drop it down into the tens of thousands for the duration of that model, 20 years. Going through the police, similar. This is the big picture of the model. This is the kind of focusing in, showing that we literally go by line items of the budget. And these are the indices you will see, police, law enforcement in their CalPERS. It's a different formula, different retirement. And so their contributions here for CalPERS as costs are higher than other areas like the gate. So now we get back to that pro forma, that summary. So in this case, we're looking at what is an $80 a year, should be more like $500 a year, and it has a 3% inflation to, again, minimize the impact on the general fund. So there's the 500, 3% per year, 20 years. And here's just showing you the kind of the pro forma for 20 years. But this is the line that we end up kind of focusing on and making some adjustments to, again, minimize the impact on the general fund. So currently 1.576 is the general fund contribution, because obviously we do have the special tax revenue. And it keeps that number down into the tens of thousands. There's some blips out there where I suspect we have more capital needed, but this is the model. So as we kind of reflect on those two, you have the gate going from 75 up to 185, and the police going from 80 to 500. just a baseline set of numbers for you. I'm just trying to show you how the model is created. This tells you a little bit about what the outcome was. So now let me bring in the component of the CIP. So we don't have, or did not have, a real comprehensive CIP that said, you know, pickup trucks can last 7 years, but then you have to replace them. Pieces of equipment can last 8 years, but then you have to replace them, and they cost $100,000 or something. And so we've done this 20-year plan, intending to recognize that roofs don't last forever, HVAC systems don't last forever. Things have to be repaired and or replaced. So we involved the entire organization, all the departments and divisions to do this. And again, kudos to them in coming up with this, and we'll continue to improve on it and refine it. But it is something to help the board, help the public understand the magnitude of what this district operations entail. This is a picture of the summary page for the CIP. And the upshot of this, I'll just say, is there are hundreds of thousands of dollars of needs on an annual basis that need to be planned for. You can't just run things so closely to the edge that you don't have the wherewithal to get the equipment and the tools that the employees need to do the service for the residents. So this is a district-wide picture, a couple of shots as examples within it. This is the admin department, administration. So in here, you'll see we have things like computer replacements or a roof on the administration building. Out into the future, we have computer servers, and we had gone through a replacement of servers and recognized the cost is about $60,000. Down here, flooring. Those kinds of things were thought of and at least identified, so that hopefully we'll be doing a good job of planning and preparing for their replacement. Here's a picture of the police department, CIP. And at the top, you know, one of the things some folks have talked about is the patrol vehicle replacements. And we recently replaced one with a four-wheel drive, and you know, hopefully people will recognize the four-wheel drive is intended to help ensure we can get to the top of mountains in the snow when we have to. And so it's an upgrade from an all-wheel drive, but the purpose is to provide a better service for people. In this case, what we show is they project to have annual replacements of vehicles in the next 4 years as well, and then a couple of years off, and then replacing again the 5 vehicles. So you can see they're planning to have those squads for 7 years and then change them out. And you know, as we get closer to those days, you know, if we can get another year out of it, we will. But in the event that, you know, it is due to be replaced, we hopefully will be funded for that. Lastly, this is the gate, kind of minimal costs for kind of the computer systems for the most part. So now I want to kind of bring all of this together into the model. We brought it all in. I kind of showed you the snapshot of the general fund projections, and you'll see the red numbers that are in here. We did put some percentages, escalators into the property tax, the rental income. We rent property out either for grazing or for agricultural purposes down in Cummings Valley. So we have lease terms with increases, so we factored those in. And then the RFID sales, we've got some escalator in there as well. So this is kind of a better focus on that projection, and again, taking all the revenues in and expensing. You know, we look at the bottom line. In this case, it is whether or not we are adhering to the minimum reserve amounts. And in this case, as I mentioned, out in 2029, we begin to dip below that level. All right, so this is the kind of the whole model, if you will. It takes a couple of pages, but that general fund projections for 20 years out here, the capital improvement fund, and I'll explain a little bit more why that comes into play. We certainly have the general fund capital that was reflected up here on this red line. So those projections that we have for administration or police or gate are incorporated. And then this page shows the police department and the gate and their pro forma that we talked about. And then we get to the summary at the bottom. And down here, we take all of those changes into effect, and we talk about our fund balance, our ending balance, and whether we're meeting the goals of the minimum. And it takes into account an increase in those two special taxes. So this is a look at the base model. So once you throw all of this together and you have a general fund which has been relieved by some of these taxes, and remember we had an $85 and a $500 number. At the bare minimum, we will start focusing down here. So we create the model. When you change one of these numbers, everything changes, and you can project out and see if you're going to be in the black. In this case, for an increase of $100 in the police tax to $180 and a $25 increase in the gate to $100, we end up having a balance at the end of 20 years. So it meets the goals, takes care of the capital, the operations, and then has a positive for the fund balance policy. The effect of this would be $10 per month more, $125, $10 per month. It rounds out in the model. So this shows you hopefully kind of the conclusion, the summary, and how we use the model. So let me bring in this idea. That basic model takes care of the capital for the general fund. One of the things as we were preparing the model, we recognized that we still have outstanding the issue of the water system and the roads on top of the water system. So envision that when we see a segment, a mile of water pipe that needs to be replaced, we're I think going to try to get then the road replaced, repaired, enhanced on top of it. So those kind of items are on hold while we hopefully deal with these. As I look at where we've been and what we're trying to do, sustainability comes to mind. So financial sustainability means, we have the right revenues coming in to fund our operations and our capital. In this case, the roads assessment hasn't been adjusted in 26 years. And so I think it's woefully behind on what it used to be able to accomplish in terms of fixing our roads. It also doesn't have the wherewithal to replace the equipment that we use to repair the roads. So this is a snapshot of the roads 20-year CIP. You'll see that they have plow trucks. We did purchase 3 trucks last year, but we have a fleet of 5 and 5 routes that when it snows around here, that they're out there fixing that. We have street sweepers and tractors, backhoes, things that they use every day. Those are the tools for the roads department. And I used this so that as we did the models, we may be able to include some of this capital for the roads as a part of it. Because again, once you relieve the general fund of some of the costs for police and the gate. They're general fund dollars, and they can be used wherever. As I look at what we have achieved so far in the community, we've stabilized the water fund, we've stabilized the sewer fund and the solid waste fund. As we move forward here, if some adjustment is successful, we would have stabilized the general fund and police and gate within it for 20 years. And so capital for roads is still outstanding. It would be another thing that hopefully we could ensure is sustainable for the long time. One of the things that was included when they made the CIP was a line for road pavement projects. So Daniel Haggard is our supervisor who worked to prepare this and took into account what the roads need for equipment, but also recognized the assessment hasn't been changed in 26 years. Our purchasing power is hugely diminished. So he's got $350,000 a year in here that we could use to put improvements and repairs in, even awaiting a larger funding for roads with a water repair. So I share that with you because it's going to be in some of the models I'm going to show you in a second. All right, so I'm going to stop there with that. And wish I could take your questions, but this is merely a recording. Perhaps it could be live, but let me now go through the models. So back in May, I think it was, or maybe even April, we presented the initial presentation to the board and asked for them to think of some scenarios that they may wish to have the model take a look at and come up with what are the impacts of that. So I'll get into that now. All right. The first model I've already kind of shown you. So that is this one. And what I'm going to show you real quickly is, we focus on this, but within the model, I can move it out and show you that out in the last column here, it's in the black. And that $792,000 number gets carried over to show us. So we can quickly use different scenarios by plugging a number in here. So if I was to make this 50, you'll see red coming up. So we can quickly see impacts with the model, and that's what it was intended to do, is help quickly understand all of those costs and things and the future. So the first one that we wanted to look at was really kind of the minimum. It would be $180 for the police, which is an increase of $100 a year, another $25 on the gate per year, so a total of $125 per year increase, about $10 per month. Let's see, the second one is, and I didn't get into this, so let me show you now. I had this line of other capital, and with the bare minimum, there's no funds relieved enough to apply to the capital needed for the roads equipment, or that $350,000 to help fund repairs. In this case, this other capital line reflects that. And I'll show you as an example. These numbers are going to be the same back in 24, 25, I think we are. 24. We carry whatever the road burden is, roads fund burden from the CIP, and we bring it back down and plug it in here. And you'll see a distinction in that other capital line. Currently, this doesn't include, but it just has, we have a lot of equipment due. But when you get out into the 24 and beyond in the original CIP for roads, we've had the model separate out equipment from equipment and road. So in this case, $250 per year, which will be $170 a year on the police, or $75 on the gate, for about $20 a month increase. And for that, we again have a sustainable general fund for 20 years, but we also will have been able to acquire the equipment that the road fund would need. Next model is 300 and 165 right here. And so if the police tax were at 300 per year and the gate was at 165 per year, then you pick up the additional capital of 350,000 to be used for road repairs, as well as having funded the equipment. So that's the next interval, if you will. We asked the board to give us some scenarios. So I'm going to show you all of what I shared at that meeting. The next one is, well, what if folks paid $1 per day per parcel for police protection, and it was indexed by 1% per year. So that's what this model represents. And then the gate tax would be 50 cents per day, indexed for 1% over the duration of the tax. So, or 20 years, the model. So what we get would be 365 and 183. The increase would be about 285 for the police and 108 for the gate, a total increase per year of 393, or $33 per month. What is probably more significant is the ending fund balance is much more significant at the end of the 20 years. This is excess fund balance. I should make that clear. It's not just the fund balance, it's the excess to the requirement. Okay, the next model, I think, was this one. And I think one of the directors had done their own calculations. They had looked at $514 for the police and $117 for the gate. So here we have a total of $476 increase for the year, or about $40 per month. Both of those models, by the way, fund all of that road equipment capital and repair amount. I think this is the next model. So one request was to model no police department. And in this case, we would have 0 there. We would also have zeroed out the taxes. So that shows currently at 0. Didn't change the gate operations. It would fund all of that capital. And for that, you'd have a savings of $80 per year, $7 per month. But obviously it frees up the general fund. In this case, at the end of 20 years, we'd have an excess of 19 million. Let me put that in some sort of a context as well, because I'm aware some people look at the costs of future improvements to the water system and or the roads, and this 19 million is an accumulation. So it's not 19 per year. It's just at the end of 20 years, we would have saved up enough to have had 19 million. And this graph just shows how it increases. It's not graph, but chart. It increases all the way up to that 19 million over 20 years. So it's not available every year for debt service. Okay. So I think that pretty much covers the presentation that we made. However, now the question for the residents to provide input to the board. They asked us to use our Engagement HQ platform, which we have for these kinds of interactions, ways of getting feedback from people, for a new approach, if you will, to let people see documents, see the plans, and comment on it. So they asked us to do a poll, and they selected two models that they would like people's input on. The first was this model, which is the bare minimum. It basically creates a 20-year sustainable revenue source at about $10 a month, let's say 180 and 100 for the gate. That was the first model. The next model, I believe, would be not that one. Pardon me. This is kind of live for me. Sorry. Now I've lost my track. Apologize. Okay, it's this model. So what this achieves is fully funding the general fund, fully funding the capital for equipment, and some amount to be used to repair, replace roads on a daily annual basis. It's $300 for the police and $165 for the gate, a total of $310, or an increase of $26 per month. So, you know, for me, I guess I see that it checks off the remaining boxes we have to try to be financially sustainable, but for the two big projects outstanding, which is kind of the water system and road improvements in the future. So I think that pretty much wraps it up for the presentation. We're doing this again because folks are having difficulty seeing the presentation. I hope it helps you. We're available if you have questions. We'll be posting this on the Engagement HQ site. We'll be putting more information on there, then we'll be putting a poll on. And the intent is to help give the board some information about where the community stands, what they feel. We have timelines to try to have a ballot measure. Board hasn't made that decision yet, but if they want to, there are some deadlines they have to meet. And so we're trying to give them the information, not only in this format, but from our residents in the poll. And then they'll take it from there. So with that, I will stop my presentation, and for whomever sees this, I thank you for your attention and your interest in it. And we stand ready to answer questions, and please use the Engagement HQ site to communicate with us and share your ideas. So with that, I think we are done. Thank you very much.